AMC and Bed Bath & Beyond are surging higher here today with cost to borrow rates that are out of this world. 600, 300%. These have become typical within these stocks. Now, we're going to talk about AMC, about BBBY, how high these stocks could go, what's going on with both of these stocks, and where the opportunity might be at this state in time. Now, that's going to be kind of split in the first half of this video, so we're going to get straight into that right away. And then the second half of this video, more or less, is going to be about what could happen tomorrow, about the economic data that's going to be coming out, and a little bit on the S&P 500, guys. So if that sounds like something you want to be a part of, hit that like button and subscribe to the channel. Thank you guys for watching. Let's get straight into it. So for BBBY, the stock is up give or take 30 to 35% by the time you guys are watching this video. Right now it's up about 32.5%, and the short interest, the cost to borrow rates are going crazy. So is the share price. Bed Bath & Beyond sitting at $4.59. It was just at a low of about $1 a couple trading days ago when it warned of bankruptcy coming really shortly, right? That there's not a lot of hope for the business, and that can send stocks a lot higher, as we've seen in 2020, 2021, 2022, and now 2023. But besides the actual price of these equities going higher, the big story might be the cost to borrow rates and the actual short interest that could go to show these stocks could rally a lot more, and specifically AMC. I think at this point, after Bed Bath & Beyond has rallied 200%, AMC might be the next one to go, and we'll talk about that in just one second. BBBY's short interest sits at 38.45%. The cost to borrow average sits at 396%. Cost to borrow max of 655.41%, and cost to borrow minimum at 9.25%. If you look at Interactive Brokers short availability, there's like 0 shares available to be sold short for a vast majority of the day today, and the cost to borrow rate is 67%. So even AMC has higher numbers than this, but still very, very good numbers that we're seeing. As far as the option activity, 106 orders totaling $5.39 million, positive order value of 79%. So if we're comparing Bed Bath & Beyond to AMC, the option activity definitely looks a lot stronger in Bed Bath & Beyond, and that's probably because the stock is going through a major rally. Now, next week might be the big opportunity for AMC, and we'll also talk about that in just one second. Now, if you do look at Bed Bath & Beyond, they are on the threshold securities list, so they are a very hard stock to borrow, and there is failure to delivers within the company. Even though we don't have a lot of those exact numbers, we could try to pull up the latest estimates that we have seen, and what we have seen over the past couple of months or so are failure to deliver rates roughly in the same range as AMC, granted on a day-to-day basis. A couple million here or there down to 0, another couple million here or there. That's kind of what we've seen for all of these meme stocks. After all, they don't want to get caught with their pants down again and send those red flags to FINRA and the SEC. So there is that information on Bed Bath & Beyond. The stock is now up about 38%, and it looks like it has some pretty strong momentum, especially if it can somehow shave off bankruptcy. You could see this stock double from here, in my personal opinion. I think you could see this stock head to roughly $10 per share. I think that is a very big possibility from here, but 200% from here to see this stock go to $15 or $20 is a little bit less likely than I think to see AMC go up 200% from where it is, just based off of where the stock was and where it has went compared to where AMC was and where it currently is now. Now, if we take a look at some of the same comparables that we were looking at for Bed Bath & Beyond, you could see the live short interest of free float is 22%, which for both of these companies, Bed Bath & Beyond and AMC, you're sitting at, some of the highest levels that you have been at throughout all of 2022. I know for AMC, this is the high for short interest that we have seen over the past year. So that makes me very encouraged to potentially what could come. And this is straight from the DTCC. This is straight from the SEC, straight from FINRA. The settlement date for December 30th, 2022, released yesterday, had us at 22.01% short interest of free float, which has not happened since you got to go back here to 2021. So this is indeed a high for the last year, for 2022 in total, guys. So there is that information. I think that is one of the single most bullish things, at least in my opinion, that makes me so bullish on AMC, especially as we have started to see this rally and you're now back above $5 per share. I said it in the last video, I'll say it again. I think 650 to 750 is where you see a little bit more of that squeezy activity, right? Where you can see a little bit more of that short squeeze kind of effect start to take hold. Now, if we can get another green day tomorrow, we'll talk about the economic data in a second, but if we can get that green day tomorrow and next week can also be pretty bullish for AMC, we're going to have more earnings, so that will be very key. Then I think you could also start to see a gamma squeeze, and we'll look at the option activity as well here in just 1 second. Now, the cost of borrow rates for AMC as far as Interactive Brokers short availability sits at about 109%, so higher than Bed Bath & Beyond, with 0 shares currently available to be sold short. A vast majority of the day today, it's been 0. You did see a weird 84 shares that were available to be sold short at one point today, but not currently. Now, cost to borrow average sits at 288.69%, cost to borrow max of 315.1%, and cost to borrow minimum at 7.26%. So the numbers here not quite as high as Bed Bath & Beyond, but even when you're looking at Interactive Brokers short availability, the numbers are actually higher than BBBY from what we're getting reported from Interactive Brokers. Now, if we take a look at the charts for Bed Bath & Beyond, the stock, like I said, is up about 37.5% at the time of recording this video. Bullish indicators everywhere. In the grand scope of things, this stock could rally quite a bit. Like I said, it could easily double up from here, in my personal opinion. That would put the stock roughly in that $9 to $10 range, and that would be roughly where we were in September. But you guys got to remember, if we get more announcements or updates from this bankruptcy proceeding, that's not gonna bode well for the stock, in my opinion. After all, market makers, they control the markets, and you're starting to get a little bit on that severe overbought side. So you want to be careful here. Not that the stock could not rally further, but would I start a position right now? Would I go balls to the walls right now? Absolutely not. Would I take a little bit of profits? Probably. Would I keep positioning in the stock? Absolutely, because you don't want to be the dumbass that, you know, called the top here, but then it went to $20, right? It's always a possibility, and a little bit of money can take you a long way if the stock does make a move like that. But you don't want to be also, again, the dumbass that made 2,000% but lost it because the stock came cratering down on a new announcement, and you didn't take any profits. At least at the very minimum, I like to say, get your money back on the trade, right? If you spent $500 and now it's worth $5,000, I would get $500 back at least, or call it $1,000, and keep most of your positioning in the trade, but still make a little bit of profits, right? Still make sure at the bare minimum, if the stock went to 0 tomorrow, it would not be a losing trade. The last thing you want to do is take a massive winner into a loser. So there is my analysis on BBBY as far as that is concerned. Very hard to play technicals when you're talking a short squeeze. Now with AMC, it's a little bit more clear cut because the stock is only up about 54% from the low that we did set. So even compared to Bed Bath & Beyond, it has not rallied nearly as much, but you're starting to get a lot of these bullish indicators that are popping up, like the RSI and the MACD. RSI barely at neutral territory, the MACD barely in positive territory, and it just looks like the stock could rally a lot further from here. Now, if we take a look at the stock tracker data, you have a lot of options that are on the option expiration for next week. If we take a look at calls that are in the money for next, I don't know why it just updated like that. Let's go ahead and retype that in. I don't know what's going on with Stonko Tracker here today, but nonetheless, you're sitting at about 450,000 contracts that are in the money, or out of the money, I should say, for next Friday, and you're at about 20,000 that are in the money on the put side, at about 140,000 that are in the money, and about 15,000 that are out of the money. So there's potentially 60 million shares that would have to be bought by the market makers if AMC could really start to break out above 650, 750 and get close to that $10 price. That's where you would be in full-on gamma squeeze mode. And I think given what we have in the markets and the lack of volatility that we have really seen today with the CPI report, that could set us up very nicely for next week. Now, as far as tomorrow, we obviously have to get through the economic data. We have to get through the Michigan Consumer Sentiment Survey for January. We're going to get a lot of information on how the state of the consumer is doing, what they expect inflation to be, what they expect their raises to be. You know, we're going to get a lot of kind of consumer specific data coming tomorrow, and that is going to be very important to the markets. Now, at the same time, you have banks that are reporting earnings as well, in which that's going to be key, because you're going to get like balances of checking accounts, of savings accounts. Are balances healthy? Are consumers starting to default? These are questions that the markets have had for a while now that will be answered tomorrow. And we're going to have basically all of the top dogs reporting earnings as far as banks are concerned. The largest kind of consumer banks like JP Morgan and Bank of America that will report earnings tomorrow, as well as United Health Group, Delta, Citi, Wells Fargo, BlackRock, and BNY Mellon. First Republic Bank as well is on this list. And then next week you get into Tesla, some of your more tech stocks, and you really start to kick off earnings season. But the banks tomorrow will drive the markets, and they're going to be in pre-market, so you're going to really see what that move is by the time you guys wake up in the morning, look at your phone, look at your computer. You're going to see, are the markets taking these earnings as bullish or bearish? And you're going to see the reaction from the stock market, guys. So that is pretty much going to be it for this video. That's really all you need to know as far as tomorrow. Next week does kick off more with earnings. Earnings will be the big story throughout 2022. And just for an example here, like a 17 times price to earnings multiple on the S&P 500 is pretty richly valued, especially when the federal funds rate is 5%. And we had about $220 of EPS earnings for the S&P 500 last year. If you value that at 17 times earnings, that puts you at 374 on the S&P 500. Now, if you can get roughly 10% earnings growth, that would be about 260 for S&P 500 earnings times 17. That would put the fair value of the S&P around 442. Well, and that's for the ETF. Now, a lot of people like JP Morgan expect earnings to be around $200 of EPS for the S&P 500, even around 205. I believe JP Morgan's exact estimate is 205. If you times that by 17, you're looking at about 350 as a fair value for the S&P 500. If the Fed does start to cut rates later in the year, but earnings are still 205, and you can get, let's call it a 19 times multiple, your fair value is around 390. So you want to be very careful heading into earnings. If you start to see a lot of big downgrades from analysts, or you start to see the actual full year earnings guidance cut in a big way for like Apple, Microsoft, Google, Amazon, that control the stock market, right? That have the largest weighting in the markets, then you're going to see a rapid recalculation of S&P 500 earnings, which could send the markets down Mike Wilson from Morgan Stanley thinks anywhere from 300 to 330 on the SPY, and that is the S&P 500 ETF. And just for an example here, guys, you have rallied a lot as of recently. If you were to fall in this earnings season down to 300 or 330, 300 on the S&P would be a drop of about 25% from here. 330 would be a drop of about 16, almost 17% from here. So we're talking big numbers, guys, and that's all based off of the earnings cuts that could be coming this earnings season. So that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.